Namaste, Sasirikal and Vanakkam friends. In today's video, I will analyze India's first and only listed company with core business of EV. This company is not so famous but has great potential to give multi-bagger returns in the future. So don't miss this important video. The name of the company is friends Wardwizard Innovations and Mobility Limited. It is headquartered in Gujarat in Vadodara and its chairman and managing director is Mr. Yatin Gupte. The company has 10 plus models of electric two-wheelers under the brand name of Joy e-bikes. Okay, and some of them are Wolf, Generation Next, Beast, Thunderbolt, Hurricane, etc. Okay, and the company has a production capacity of 4 lakh units per annum. Let us now look at the roadmap of the company to understand about its background. If you see friends, in March 2016, the inception of EV operations was done. Then in October 2018, Joy e-bike, 2 models of low-speed e-scooters were launched. Then in October 2019, BSE listed company Manvijay was acquired and renamed to Wardwizard Innovations and Mobility Limited. Then in 2020 and 2021, multiple new electric two-wheeler launches were made. Then in January 2021, friends, a new plant was inaugurated by Shri Amit Shah, the India's Home Minister. And then in February 2022, the company acquired 4 million square feet of land for EV Ancillary cluster, which is the first time in India. More about this in the later part of the video. So with this brief background, I hope you would have got some idea about this company. So friends, let us now look at the macroeconomic factors affecting the EV market globally, and then we will see the Indian market. And after that, we will look at the financial analysis of the company. Okay friends, let us look at the global macros first. If you see, the global EV sales were 6.5 million units in 2021, an increase of 120% from 2020. And the market size is projected to reach 39 million units by 2030. In value terms, it is expected to grow from $287 billion in 2021 to $1.3 trillion in 2028. This is the global market. Now let us look at the Indian market for EV vehicles. If you see the vehicle sales, total vehicle sales in FY22 in India was 16.38 million units and EV sales were 0.43 million units. So EV has a share of 2.63% in India. In EV, let us see two-wheeler electric vehicle sales. In FY22, there were only 2,31,000 unit sales of electric two-wheelers out of total two-wheelers of 1 crore 19 lakhs. So electric two-wheeler has a share of 1.93%. And Wardwizard itself in the previous financial year sold about 30,000 plus units of electric two-wheelers. So this data shows that there is a huge potential for EV sales to grow in the future, and we all know it is only a matter of time that all vehicles will become electric in the future. So if we can invest in a good company now when the market is still small, tomorrow we can get very high returns. Okay friends. So let us now look at the demand drivers to this industry. So government is giving incentives for reducing carbon dioxide emissions, right? So there are environmental factors. That is the first one. Second, if you see the increase in fuel prices, which are increasing day by day. Third is the low maintenance of electric vehicles. So that is third one. And fourth, if you see friends, a lot of food delivery companies such as Swiggy, Zomato are adopting electric vehicles. Let us now look at the challenges facing the company. First one is relatively high cost of manufacturing since mass production has still not gathered pace in India. Second is dependent on global supply chain for raw material. Then third, you have high initial investment cost for EV charging infrastructure and low number of charging, EV charging points in the country. And then finally, you have the safety issues relating to fire and all these things. An important feature about the company is that they are setting up India's first EV ancillary cluster in Gujarat, an ecosystem to ensure all the components are manufactured in India and reduce the dependency on exports. So they are inviting all those companies which produce essential EV components and grant them everything needed to maintain the supply chain process, from land to state-of-art facilities, human resources, research and development, etc. And this can be a game changer for the company, friends. So friends, let us now look at the financial analysis of the company. And if you see friends, in financial analysis, we are doing financial analysis only for the last 2 years, FY22 and FY21, because then only the company has started making decent revenue. Before that, it was all the company was setting up its infrastructure, so there wasn't much revenue. It was only all the expenses, and the company was in a loss. So if you see revenue for the last financial year, FY22, the revenue was 185 crores, and FY21 it was 39 crores. Okay, so good growth you can see in revenue last 2 years. PAT, profit of the company, FY22 was 8 crores, and the previous year it was 2 crores. So from 2 crores it has grown to 8 crores. Profit margins of the company for the last 2 years were 4.58% and 4.76% PAT margins. Okay, this is low because the volumes are very low now. Once the company starts going full capacity, then this will also increase in the future. Okay friends, then if you look at the gross margins of the company were for the last 2 financial years 14% and 19%. So decent gross margins of the company. And EPS of the company is 0.35 rupees and 0.10 rupees for the last 2 years. And if you see the return on equity of company friends, last 2 financial years, it was 18.76% and 9.58% for last 2 years. So I would say return on equity is very positive for this particular company. Now let us look at the 6 months, half yearly financial results for this financial year ending 22-23. For this 6 months year ended, period ended 30th September 2022, and comparing with the 6 months of the last year, if you see revenue of the company for this 6 months is 119 crores, and the last 6 months it was 45 crores. Profit for this 6 months is 5 crores. Last 6 months profit was 2 crores, and profit margins are 3.85 and 5.17%. And one more development or which has happened in the company is that the company has got short-term borrowings, only short-term borrowings for 8.3 crores as on 30th of September. Because why this is important? Because as on 31st of March 2022, the company was having nil borrowing. So it was a debt-free company as on March 22, but September it has got borrowings, but it is still short-term borrowings only friends, not long-term borrowings. Okay. Let us now go to the balance sheet of the company. If you see balance sheet, overall important point I would say is current ratio. If you see current ratio for the last 2 years was 1.12 times and 1.91 times. Okay, and then the total fixed assets of the company, that is property, plant and equipment, has increased from 15 crores to 36 crores as on March 22. And then if you look at the cash flow of the company, cash flow from operations positive. FY22 it was 10.84 crores. And FY21 it was 0.04 crores, and net cash flow for last 2 years was 15 crores and 1 crore. Okay friends, then coming to the dividend, if you see friends, in last 2 financial years, okay, the company has declared 0.05 rupees and 0.075 rupees, okay, less than not even 1 rupee. So this are the 2 amounts of dividend per share declared by the company in the last 2 years, totally amounting to 57 crores and 36 crores for the last 2 years. Okay, and if you see friends, based on the financial analysis, overall there are no red flags as far as financials are concerned. But since if it is still a very small company, right, 180 crores of last year turnover, it doesn't look very attractive as compared to other big companies in the market. But it is very small, but it has good potential in my opinion. Let us look at the valuations of the company now. If you see the market cap of the company currently as on 11th December, I'm shooting this video, the market cap of the company is approximately 1,800 crores only. So it is a micro cap company, not even a small cap, micro cap company. Share price is 72 rupees, and share price really fluctuated in the last 1 year. From it went to high of 95, 96 to the lows of 50 rupees. Okay, so if you see the PE ratio of the company, trailing 12 months PE ratio comes to 205. 205 is very high PE ratio. Okay friends, but I don't look at the PE ratio in this company particularly because I look at the overall market cap of the company, right, which is just 1,800 crores. And if you see the company is rapidly growing, it is in EV sector, which is a sunrise sector. So surely in my opinion friends, 1,800 crores market cap can become 2 to 3 times easily in my opinion next 2 to 3 years. And the company also aims to have 25% of market share in electric two-wheelers by 2025. and it is also introducing electric three-wheelers and also plans to introduce cars in the future. So in my opinion, friends, the market cap can go to 15,000-16,000 crores also in the future from current levels of 1,800 crores. So it has good, runway for the future. If you look at the promoter shareholding, friends, Yatin Gupte, the MD and CEO, has maximum stake of 35.29%, and other promoter group companies, if you see, total promoter shareholding comes to 70%. So promoter holdings is also good for the company. So coming to the conclusion, friends, you can follow this company on Twitter, LinkedIn. They post all of their updates, whatever the company is doing, and based on whatever I have tracked on about the company on corporate governance angle, all things look good only. But one important disclaimer is that I have personally invested in this company and just sharing this information about the company for education purposes alone. Please do your own research before investing in this company. Okay friends, with that we come to the end of this video. If you do like it, share it with your friends. Thank you for watching. I will see you all in the next episode. Until then, C.S. Karthik signing off.